Welcome to Edison's Accessing the Global Capital Markets interview series. Today we'll be focused on the US markets, and we're delighted to have with us Jason Paltrowitz, who is the Executive Vice President of the OTC Markets Group. Jason, welcome.
Thank you for having me.
And what we're going to focus on today is the corporate services part, which is what you oversee at the OTC Markets Group. So there are three tiers to your market: the QX, the OTC QX, the OTC QB, and the Pink. So perhaps you could go into a little bit more detail about those different tiers, and perhaps starting with the Pink market, the default market. So what actually trades on Pink?
So Pink is what we would call a broker market, right? There's really no company interaction with the securities that trade on Pink, or limited company interaction. It's a catch-all. And by a broker market, it means that in the US, unlike most other markets, broker-dealers can decide to trade a security based on the demand from an investor. So because of that, Pink has all sorts of different types of securities. It's got bankrupt companies, distressed companies, some of the largest international companies. Anything where an investor wants to trade a security, a broker-dealer can get a ticker symbol and trade that on the Pink market. If you take that and then look at our QB and QX markets, those are what we would call our premium markets. That really changes the game into securities where the issuer has taken the engagement level to have their security traded. So our QB market, simply put, is a venture market. It is the venture market in the US. Really early stage growth developing companies, limited financial requirements, but very significant disclosure requirement. So we feel that companies that are open and transparent, if they're putting their information out, investors can decide whether or not they're investable. So we really force that transparency. QX is our best market. And there you'll find high financial standards, corporate governance standards. No penny stocks, as an example, trade on QX or can trade on QX. And that really raises the level so that when you look at a QX company, recognizing that there are venture companies on the venture market on QB, venture companies can fail, they're startups, but they could still be investable. QX, are really companies that meet that higher financial standard.
So Jason, thank you for that overview. So many of the companies that Edison works with will be publicly traded, and especially smaller companies that are looking to access the US markets for the very first time. Most US institutions can happily trade on a major foreign exchange. So why your platform?
Well, as you rightly point out, Rachel, the largest institutions, the Fidelities, the Janus, the Capitals, they've got global infrastructure that will allow them to trade securities all over the world directly. But once you start drilling down to the not Fidelities of the world, the second and third tier institutional investors, the retail, the family office, it's really difficult and expensive to trade directly into a foreign market. Companies want to be able to trade in the US, and investors want to be able to trade those companies in US dollars, in US time zone, and be able to get the information that they're used to seeing, whether that's financials in US dollars or press releases on the places where they do their financial research. And by just staying in your home market, you're missing out on those opportunities.
Okay, but why wouldn't a company just consider listing on NASDAQ or the New York Stock Exchange, for example?
Well, there's really 2 points as to why you wouldn't really jump into a national exchange. The first would be cost, and the second would be risk. So from a cost perspective, you have to think about listing on a national exchange here opens you up to an entire new reporting regimen, right? You now become a fully SEC reporting company, and all the costs that go with that. Sarbanes-Oxley compliance, reconciling to US GAAP, all the things that you need to be on a national exchange. That's incredibly costly, incredibly time consuming, so cost both in terms of money and management time. And then to that second point, risky. Companies know their home market disclosure. They know what their home market regulators are looking for. Do they really want to be in a position of then having to have a team of people understanding what an entirely different regulatory regime looks like? And so most international companies, and again, from the Roches and the Adidases of the world, down to really early stage growth small cap companies, recognize that you want to access the US. It's the largest pool of investment capital in the world. But how do you do it in a way that's cost effective, doesn't increase your risk burden, and gives you what you need to be able to access those investors?
You've been working in cross-border trading and settlement for over 20 years. What advice can you give a C-level executive who's contemplating embarking on a US strategy for the first time and how they should think about making it as easy as possible for their shares to be traded and settled? Sure.
So I think what gets lost for a lot of small caps around the world that are looking at the US, a couple things. First, the relationship they have with their local broker is significantly different than the relationship that companies have with brokers here. First of all, we'll take the UK as an example. The nomad or the structure there, companies rely on their nomad and advisors, and it's a much smaller market and there's much more of a reliance. The US is just so big. It's so big, there's so many different types of investors, and investors aren't traditionally using a preferred broker-dealer to access their securities. So US investors, many of them can't access a local broker-dealer in the home market. You want to be able to make sure that you're globalizing your IR strategy in such a way that you're capturing the widest, most diverse shareholder base in the US. And so you really have to think about it in terms of what can you do that's cost-effective, that kind of meets the needs of what you're currently doing, but also meets the needs of the US investor community.
So let's talk a little bit more about that, because I think that's important, especially for smaller cap companies. It's really one of the things that we emphasize at Edison. It's really important to have ownership of your IR strategy and be targeting broad and diverse pools of capital. So maybe you can talk a little bit more about that, and in terms of if you're looking at targeting institutions, family offices, retail investment advisors, etc. in the US, how a quotation on your platform enables the process.
Sure. So again, we'll go back to the fact that just the US is so big and so diverse. So as a company, maybe you'll come over and do a non-deal roadshow 2 or 3 times. Maybe you'll hit some conferences and you'll meet some investors. But what do you do to support that investor community when you're not here? What do you do to, what we say, keep the lights on, right? So American investors want to be able to go to where they do their investment research, and they want to be able to look at like for like. They want to see your financials, they want to see your news flow, they want to see your press releases, they want to see all the information that they would expect to see from a US company. And so at OTC Markets, what we do is we Americanize that through our trading. So you're trading in US dollars, in US market hours, but we're also Edgarizing your financials, so your financials look like an American company's financials will look. We're making sure that all your news flows out into the US, whether it's via Bloomberg or CNBC or MSN Money, so all the places where investors do research. And the most important is by having a US ticker symbol. Investors can go to their Schwab account or their Merrill account on their phone and be able to type in your ticker symbol, your US ticker symbol, and see all of that information in the same place they're going, whether it's IBM or GE, to buy that security. And if you don't do that, if you make it difficult or you just add friction in the process, there are so many other securities that an investor can buy, they'll just go there. And so it really takes away that trade friction by having that US tradable vehicle.
So that's great. You're a European company. You've decided to list on the OTCQX Best Market. You've come to your lovely offices in Manhattan for the opening bell ceremony. Then what? So what then do you advise companies to make sure that they've got the best visibility in the US market?
Well, first of all, I would advise companies that you can't just dip your toe in the US water. If it makes sense to have a US or a North American IR strategy, you really need to be thoughtful about how you do it. You can't come and go. So certainly from a market perspective, we offer companies a lot of secondary market visibility services, whether it's virtual investor conferences or CEO videos, things that we do to help the company kind of stay on the radar when they're not in the US. But we're a market, and we can't replicate what a good IR strategy or IR provider can provide. And it really is about having that digital strategy, that forward-looking plan to make sure you know how you're going to access those investors and really support those investors and give them what they need on an ongoing basis. It's a marathon, it's not a sprint. You're not going to get large institutions the first time you come in the United States. You're going to have to build towards that. And it's important that you have an advisor that understands how to build that and is working with you going forward to get to the point that you want to get to.
Great, thank you. So given that you have thousands of companies quoted on the OTC markets, could you potentially highlight a case study of and I'm thinking again, smaller company that have managed to leverage your platform particularly well?
Well, I don't want to toot our own horn, but I'll use us as an example because we just kind of celebrated our 10th year of being public. I was on the company as a board member before I came to work for the company. We were private, and we took ourselves public on our OTCQX market, so we eat our own cooking. We started small. We were a small, sub 50 million market cap company, and we're now, over 400 million. We've got our first large institutional investor recently. So we've gone through this process. It takes a long time to take a 50 million market cap company and get it to a 500 or 400 million market cap company. And it was a lot of work. It was an entire management team that was really focused on doing the right thing by our business, making sure we were servicing our investors, picking and choosing. You have to say no. You can't go to every conference. You can't meet every investor. But having a well thought out strategic plan that had board buy-in, that had management buy-in, and that was executed, and we were rated against executing that plan. And being able to work with small companies is a passion of mine. It's why I'm at the company now. And seeing companies successful the way we were successful and imparting the wisdom that we have by doing it is a lot of fun. It doesn't happen overnight. For us, it was 10 years, and we look forward to helping as many companies go through that journey as we can.
Jason, if someone wants to learn more about the OTC Markets Group and get in touch with you, what do you recommend?
Well, certainly our website, otcmarkets.com, just has tons of information, educational, not salesy. You can learn about how our markets work. You can learn how dealer markets work, ATS versus an exchange. So there's a ton of good information there. Certainly you can reach out directly to me. Make it easy. It's jason@otcmarkets.com. And we'd be more than happy to, if it's not me, get you to the right team member who can help take you on the journey.
Jason Paltrowitz, thank you very much.
Thank you.